First. Grade A music. How you doing, dude? Chris, Lex, what's happening? What do I need to do? Probably like message over Twitter, just to let people know the stream's up. And Discord as well, I suppose. 1 second. Do that. And then we'll get stuck into it. Alright, 30th of August is where we're at. We are at the 30th of August. Pretty close to a monthly close. I suppose you guys are still seeing the end of the 29th out there in the US. Only a few hours left of the day. We've got our new daily candle in about a minute. Hey, what am I going to type here? I'm live. There's the link. Chuck in a couple of kangaroo emojis. And we'll copy that and put it on Discord as well. At everyone. Should do it. Alright, so all of the notifications are out. People should start filtering through. And I'll let a few more people rock up before we get started with the analysis, but what's up, Hamid? What's up, Lee? What's up, Fia? Fia23, good morning. We just started the new daily. We're 25 seconds in. Yesterday's candle, solid green, bullish engulfing. Is that going to be enough to see us lift and recover some of this sell-off? Has all of the economic turmoil out there, like in the traditional markets, the Federal Reserve, has that already been priced in? You know, have we basically squeezed all of the water that we can out of the sponge that is Bitcoin? Have we squeezed the value out enough? Is there much left in it? You know, there's a lot of people saying that we're going to go lower, but I think a lot of the negativity in the economy right now has been priced in already. Like this drop here, this significant drop. A lot of people capitulating. What is capitulation? Capitulation means yielding, so giving up. So basically they were holding on to hope. They're like, yeah, I'm going to hold my long position. But eventually things get so bleak that they break and they capitulate, they give up. So I think the weakness has mostly been flushed out of the market for now. I think all that's left is, you know, whales just playing games to accumulate as much as they can at this range, at this, you know, 20k, 25k range that we got going. Well, it's actually 17 to 25 roughly. So, yeah, if this flush down here, let's go zoom in a little bit. I'm just going to go down to the hourly chart. And we've been in somewhat of a falling wedge type pattern. And if I go to the 4 hour, just so we can see it clearer, the reason I've excluded this wick here, I'm going to call that a bit of a fake out. That was like a little pump that happened leading up to or just after Colin Powell. Sorry, I always call him Colin for some reason. Colin Powell's the other guy. Jerome Powell did his speech at the Jackson Hole Summit. So this little wick here, I'm going to chop that out. I think the bulk of the move was, you know, in this action here, that was where the bulk of the move was. This is just an exception to that move. So I'm going to call that a bit of a fake out. So I think, yeah, we're still very much inside this falling wedge, currently testing the top resistance to see if we can pop through. There's still a lot of fear in the market, especially after this drawdown that we've had, this ABC correction, you could even call it. You can probably draw out a Elliott count for a 5-wave structure through this. You know, I don't know where you would draw it. I'm not really much of an Elliott wave theory trader, but like, you know, you got the 1, 2, 3, and then who knows where 4 was. Because I don't think that the retracements can't come lower than the previous high. So potentially something more like this was the 5-wave structure. So 1, 2, 3, 4, 5, and then an ABC correction. A, B, and C. And then now we're starting a new 5-wave, hopefully. Wouldn't that be nice if we started a new 5-wave trend up to get acceptance back into this rising wedge that we were in for 2 months. This big old wedge here. So if we can get back up above this line of previous support, which was our previous support trend, we were dancing on top of it over here. We lost it. This move here, after having that first downward move here, got people very bearish. Like, there's extreme fear in the market right now. But if you go to the higher time frame, let's go to the weekly chart. Let me hide the drawings here. I've got a bit of an alert set for 19,500 because I want to know if price breaks below that. That would be like the bearish outcome. But let's go to the weekly chart and see what's happening, because there's a lot to say about the weekly at the moment. Huge level, wait a minute, huge pivot point back here in the 20K all-time high. That's a big, what do you call this one? It's a tweezer top, because you got 2 candlesticks coming up, and it looks like a tweezer. If you exclude the wicks, of course, it's just the candle bodies. That is called a tweezer top, which is a pivot point. And so that basically establishes $20,000 as a really deep line in the sand. It's a very important level for Bitcoin. You can see the kind of activity we had off it back here in late November. Late 2020. So November, December. When we finally punched through it, that was a big deal. Like, breaking through that just caused a massive bull run. Lots of optimism came into the market. Pulling back off that initial move caused this like 3-week sell-off, 2-week sell-off here, finding support at a key range of just under 30K. And then, you know, the next leg up, you can see what happened. So that $30,000 level is probably of equal importance almost. It's probably secondary to the 20K level. So the reason I'm calling out 20K right now is because we are basically on the edge of a really bad outcome, you know, negative outcome. So we will continue lower if we fail to hold this for the next 6 days, this 20K level. We basically need to start rebuilding from here. But hey, if we do move lower, it's not the end of the world. Like, it just means we get cheaper prices and we can, you know, average into you know, a better position. Not just with Bitcoin, but all of the alts as well, because we know that the alts are driven by Bitcoin. Like, the sentiment is set by Bitcoin. And then we know that the traditional sector, so the stock market, commodities, that that sets the tone for crypto as a whole. So that sets the sentiment there. And what sets the sentiment for that, for the stock market? And that is, generally speaking, at least at the moment, it seems to be the Fed, the Federal Reserve, like the reports on interest rates and inflation and, their plans for the foreseeable future. That seems to set the sentiment and the tone at the moment. So it's crypto seems to change. Like, there was a point where it's setting its sentiment off announcements by Elon Musk. Like, for God's sake, like there's so many things that can influence crypto and Bitcoin. So who knows what's around the corner? Like, there could be something like a big catalyst that causes the next push up, or even a black swan event type thing that causes us to lose that 20k level. So remember back here, at this low here, this candle here, I think it was even to the day, was that Elon Musk B word conference. So you had, that was the catalyst that ignited this push up. And then we saw, that secondary push to the all-time high of 69k. But yeah, that's pretty much where we're at right now. We need to hold above 20k, would be optimal. But even if we hold this low here, if we maintain lows above 19,500, then we're looking good. But yeah, this is critical kind of moment, this $20,000 price point. You can see in the past how it's behaved at the same level. Bit of action, bit of activity off it. It's probably somewhat of a point of control. So a lot of price action through that $20,000 level. It's a shame. I mean, it was, a pretty textbook outcome for us to lose this support here, because it is, essentially a rising wedge. So losing that was, quite healthy, I think, losing that level. But it's a sign of, at least this point here, this pivot here, it's a good start for something, for a bit of hope there for the bulls. Like, we might be able to turn it around and start marching back up again. But yeah, it all just depends if what the market makers want to do with the price. And yeah, we just have to sit back and watch it for now. If we lose this 20k level, targets for where the next point of support would be, we've got a really long-term support trend line coming up, which is this yellow dotted line here. And if it fell today, like if it, just hypothetically, this line would come into contact with price at around just below 19,000, so 18,800-ish. If we were to like rocket, like basically plummet from here and break 20k. And then we've got that level of support, which is a very long-term support trend line. And then you've also got the retest of our 2022 low of 17,600. So two possible major points of support to work with if we do start to break down below 20k. And yeah, if we lose that as well, if we lose our low and we gun for deeper prices, you've got a couple of trend lines here that I've drawn as well. So coming off these pivots, trace it down to our $17,600 pivot here. You've got this real big old lazy trend line that comes down, which could also provide, a bounce. So there's a few different trend lines at play here. Now, another level of support potentially would be this old fella right here. The 2019 market high for Bitcoin, which was $14,000. So we rallied up. This was a bull trend. It wasn't an all-time high achieving bull trend, but anyway, it did achieve like there was some really nice gains off that, and then yeah, another blow off top again. But yeah, that's drawn a pretty deep line in the sand as well, 14,000. So that would be my next kind of like major target, 14,000. I would be very surprised if we lost support at 14,000 and went lower. That would just be really amazing. Because I think this drop here that we had back in June, like early June here, I think that got a lot of buying, a lot of people excited to buy, and that's why we spent so long here in this sort of accumulation area, zigzagging our way up to 25k. But yeah, it's all whale games really. It's just they're just rinsing and repeating, like, you know, these pump and dumps throughout this area to basically stockpile as much Bitcoin or as much Ethereum as they can in preparation for the next major macro trend up, because we haven't seen that yet. It has not. All of this structure, everything in here is all part of the one downtrend. It's made up of, you know, relief rallies along the way, yes, but for the most part, it is downtrend. So I think the way to identify when that's broken is we need to set in prices above a macro pivot point. So a macro pivot point, here's one, here's another. These are the highs, by the way. So 1, 2, you could argue that's another pivot there at 32k. We've set in one recently at just above 25k. So those are our 4 macro pivots. And then you've got the lows as well. You've got this one here. This is a wick down. And then this area here, that's like a macro pivot point. This as well, you could argue. And then obviously our 17,600. So we've got 4 points of support, 4 points of resistance to work with moving forward. So if we're calling the price action that we've just seen, this sort of potential tweezer bottom. I know it's only young. We're only 1 day into the current weekly candle, but this could potentially become a tweezer bottom, which is a tweezer bottom looks like this. See how the 2 weekly candles line up beautifully to create a pivot. So yeah, we might see some wick come down, like maybe we'll wick down to 17,000, like, you know, tomorrow or the next day or someday, but then recover that wick, recover that loss, come back up again. So that could potentially happen, and we could still call this a tweezer bottom. So there's a few definitions out there of what a tweezer bottom and a tweezer top is, but for me, the way I see it is that if you get 2 candles that have equal open and close, so we've got the close on this candle happening at 57,300 and whatever, and then we have the open of this candle happening at the same level, 57,300 and whatever, you know. I mean, they're probably slightly different, but on the weekly time chart, you can see, yeah, that they're pretty much the same point. So yeah, that's maybe what we have here. And, you know, the cool thing about it is if we do pivot off this so-called tweezer bottom, it is a higher low than obviously our $17,600 level, and also higher than this tweezer bottom here. So we had one here which caused us to rally up here. So you can see it, tweezer bottom, tweezer top, and then potentially got another tweezer bottom here. So see if we can create another macro trend to push us to the next pivot point. All right. Yeah, those are sort of like the macro trends and ideas that I have going on there. If we zoom back down to 4 hour, we're just talking about this falling wedge here, seeing if we can break out of it to the upside. But currently, it's proving pretty tough at the moment. We've tested it on the previous 2 4-hour candles. We've got wicks going up to it and getting rejected. So the line's in the sand, so to speak. We've had, yeah, 2 tests of that, and we've been rejected so far. So we're the opening candle to today, which for me is 10 o'clock. We're currently pulling down. We're only 18 minutes in, but yeah, we need to get above that line of resistance if we're going to start moving higher. If we do, you know, see another pullback down here, we just need to get a low higher than this level here, so that we can maintain the uptrend. So we got up, down, and then, you know, find support somewhere in this area and then move up higher. So that would be the play there. But yeah, it's getting, you know, as the days roll by here, it is getting more and more interesting because we're reaching apexes. You know, everything's squeezing down to a point. Might have to go to the 4-hour chart to show you that. But you know, we've got our, not only do we have our falling wedge here, you know, this apex, things are getting squeezed down into that point. We've also got this major trend line here that's like creeping up, and we've got our major trend line here. So there's this apex as well. And then we've got, you know, another giant falling wedge that we're in, which has its apex somewhere over here. So there's a lot of action. We're getting squeezed down into a pocket, and we have to pop somewhere, you know, hopefully to the upside. But, you know, if we do see pushes down, there's, you know, there's a silver lining, and that is to get whatever you're wanting to invest in or trade in at cheaper prices. So it's good news either way you look at it. If you stay optimistic, you can find a silver lining in every outcome. So that's the way I see the market at the moment. Let me see. If you're not familiar with this tool, this is actually pretty handy to draw out triangles and wedges. It's this triangle pattern, which is 1, 2, 3, 4, 5, 6. It's the 6th tool down on TradingView. It's hidden behind this thing, the XABCD pattern, and it's the 4th tool down, the triangle pattern. And the cool way to use it, let me go to the 4-hour chart. Let's scroll across. The cool way to use it would be, you just grab 4 points on the chart. So we'll start here. 1, 2, or A, B, and then C, 3, and then D, 4, which you could say is like down here. The reason I'm drawing it to here and not to here is because we've got a lot more price activity off this level here from the past. So this makes me choose that point more over this point. So this was just a wick, like a bit of a fake out. Yeah, you can see the confirmation of that being, look at all that price action bumping its head right here in this area. And not to mention the price action we're currently getting off it here. So that would be my wedge, my falling wedge that I can see. And yeah, textbook outcome of a falling wedge is a move up. Not to say that it's a guarantee, but it's just, you know, that's what we're working with. That's as a potential likelihood. You could also move this D to here. Any of these points along here, which are the seeming line of resistance that we're working with. But yeah, that's the triangle pattern. They're pretty damn handy. You just need, 4 points. And, depending where you're getting the points from sort of determines what you're working with. So that'd be obviously more of a symmetrical triangle, as its center line is horizontal, generally speaking. A rising wedge is when you've got higher highs and higher lows, but the lows are considerably higher, but the highs are only slightly higher. So it shows that the highs are weaker, but the lows are stronger. So that's a rising wedge. And then you've got, your falling wedges when your highs are significantly lower, but your lows aren't sort of losing momentum. So you can see that's what causes a falling wedge, is when, the sell-offs are not as powerful, and it's like a sign that the bears are losing momentum. But yeah, this is quite a steep, I mean, it depends how you cut the chart. You could say that that's a shallow falling wedge, but yeah, I have seen people say that if your falling wedge is too steep, it invalidates the pattern, But hey, we'll see what happens. I'm gonna find some other examples of falling wedges to see. Usually happens on a downtrend, like, we've got one here, kind of. And where you start them doesn't truly matter too much, just as long as you're getting the price action inside the shape. So that was arguably a falling wedge. It had a fake out, or a fake down, and then bang, price was recovered straight back up into the wedge, and yeah, resulted in a push up. So that can happen. If we could potentially fake out of this wedge too, like if we fall and then bounce and then come up, that's like a similar kind of outcome. But yeah, I'm just going to be optimistic and say that I think $20,000 will hold, at least for us to chop sideways. But yeah, I could be wrong, and we'll definitely know by the next stream. We've got a new month coming up as well, so let me hide all of the drawings, and we'll go to the monthly chart, and we'll see what August did to us. So July was awesome, but August was a bit of a dumpathon. And then yeah, June, April, May, June, damn, that was just bloodshed. If you were a bear, that would have been awesome. Awesome time to be shorting the market during those 3 months. And then, obviously November, December, January was great for bears as well. But yeah, the fact that we're coming off the back of such, such a long period of selling, to me would mean that starting to open shorts here is risky. It's the same as, at the back end of a bull run, like opening longs at the top is risky. So at this point, instead of looking for shorts, I would be saying, my opinion would be, not financial advice, but this is the sort of area that you start looking to build your next macro run up. So it's an accumulation range. But anyway, I think I'm going to wrap it up pretty soon, as this stream's gone for about half an hour now. So I think it's better to keep it short and sweet so that people don't have to sit through an hour-long stream trying to pull out the information. It's just a bit of a waste of time. Otherwise, yeah, I find that I probably keep repeating myself. But yeah, if I can keep them on to about half an hour, I think that's a nice chunk of time to sort of get my ideas across. All right, well, that's pretty much it. I'll put up another update once we get some more exciting activity out of the charts. But For now, thanks for tuning in, guys, and I'll catch you on the next stream. All right, take care. See ya.